What a terrible day. One more time, pretty much everything is down yet again. The question is, does it make sense to buy this dip now? In the end, it's all about buying low, selling high, or is the long-term bullish trend now over? Let's have a look at the data most people aren't considering. In the last weeks, we have not seen money flowing into crypto anymore. What we've got here behind me is the stablecoin market cap. And it's a very nice measure for whether or not we are currently expanding or rather contracting. When you are sending your hard-earned fiat currency to a centralized exchange and the centralized exchange sends it over to a stablecoin issuer like USDT, then USDT gets minted, and that's then when this chart goes up. We've seen a very nice turnaround in October of 2023, but now in the last few weeks, it seems like the market has come to a standstill. No more money flowing in since the middle of December. And now the big question is, how will this continue? Are we staying at our current $188 billion market cap? And if yes, and that's not necessarily good for crypto, right? Because crypto is a risk-on asset. It has a lot of volatility. And when all of that volatility doesn't get compensated with higher prices long-term, then why own all of that risk? That was also what happened in the second quarter of 2022, right? There was the Anchor protocol with UST, the Terra Luna blockchain. And that protocol promised 20% APY. But when there's no more money flowing into crypto, then at some point those risk-on high promise protocols implode. And that's what happened over here. The UST stablecoin depegged, and during that contraction of the market, FTX also imploded. Now let's see. Let's play with the scenario that we see something very similar yet again. Nobody knows, but let's say we will not expand anymore and we stay at the current level and something will implode yet one more time. How much longer could that take? We've got time until the beginning of March, potentially. That's at least how long crypto survived without an expansion last time. Now, I always like to follow the medium-term trends, right? Crypto is a trend-driven industry. Sometimes there's a lot of attention on one asset, then it moves to another one. Sometimes there's a lot of attention on crypto as a whole, and sometimes nobody wants to know anything about crypto. And a very common yet effective strategy is to use moving averages. So what we see here in turquoise is the 120-day simple moving average. So you would be buying in whenever the price of Bitcoin is above the 120-day simple moving average, and you would be selling Bitcoin or even short Bitcoin or bet on falling price of Bitcoin where the price is below. Now, why the 120-day simple moving average? That's because that's historically what used to work the best. So I've backtested all the moving averages up to the 200-day, and the 120 by far worked the best, and it outperformed buying and holding by a lot. So if you started with $1,000 in 2018 and you used that moving average for both longing but also shorting Bitcoin, you'd be at around 200K right now. That's very different to just buying and holding, right? That's over here in white. And so with that back test, we can very nicely time the market. Currently, the moving average is at around 81K. We should still be bullish, but we are cooling off. And so there are now two potential scenarios, right? We could either continue to cool off and then bounce off, while of course the moving average continues to increase somewhat. Or alternatively, we go down and we actually cross the moving average, and then we are going really, really down. Let's play with the bearish scenario first. Let's say we are going to fall below the 120-day SMA. How much lower could we fall? Where is a potential bottom? If things really turn bearish now, by the way, I have sold some of my Bitcoin at around 96K. I talked about this several times on this channel. Let's say this was the right move and we are really going to cross the 120-day SMA. I believe that the realized price is a very good metric to consider new entry points again. The realized price is the average cost basis of the market. So how much did people pay on average for Bitcoin? The current price is just how much the recent person bought and sold it for, right? But the realized price is in aggregate for all Bitcoin. Is the market currently in losses or in profit? And that cost basis, unfortunately, is at 41,340. It is a metric that's going up as well. But even if we hit that price level, it doesn't mean that we instantly turn around, right? We have seen still an extended period of time, several times in the past, several months even, where the current price was up to 20 or 30% below the realized price. But it definitely makes sense to start buying in quite aggressively at those levels. And interestingly enough, those kind of price levels also make sense in the overall trading range of Bitcoin, when we simply just connect the prior bottoms and the prior tops on a logarithmic dynamic chart of Bitcoin, we see that the 40-something K mark is a very nice buying opportunity. Have a look at this chart. This is Bitcoin over the very, very long term, right? A chart that starts in August of 2010. And at that time, Bitcoin was just a few cents. Now, of course, it's way higher than that. And we simply just connect the tops over here with a curved line, and we connect the bottoms with a curved line. This is simply just drawn. There's nothing mathematical about this, but still, it's interesting how nicely those bottoms and tops connect. Is this just a coincidence? I'm not so sure. I think it's rather a self-fulfilling prophecy, right? There's enough people that look on this chart that think, okay, now we are expensive, now we are cheap, and then simply people don't buy that much anymore when we are close to 100K, and people tend to buy more when we are lower. And when we zoom in that chart and we compare the realized price, 41K, then that's where we land, right? It's very close to the bottom in the long-term trading range as well. That's, I think, the bearish scenario, and it's definitely possible. We are not there yet. The price is still above the 120-day SMA, but when we fall below it, then I believe there is not a floor for a quite long time. But let's now work with the positive scenario. Let's say we continue falling a bit further and then we bounce off and we continue with the bullish momentum. What would make sense to buy in that case? Let's say we are already hedged with all kinds of other instruments. Let's say we own a lot of gold and silver at the same time. So we are safe and we want to get into something risk on again. Or in other words, we want to take advantage of this crash here. I believe there are two potential approaches here. The first approach is to buy the asset that was able to withstand the crash, that still was able to outperform everything else. The second approach would be to buy what crashed the most, simply because the thing that crashed the most might have the most inherent leverage, so what goes down the most might also rebound the most. And let's start with the second strategy. Here is what's currently crashing the most. It's the AI meme coins and the AI agents. Virtual Protocol went down in the last 7 days by 27.6%. It's almost the worst performer among the top 100. AI 16Z also went down a lot. And here's the thing with Virtual Protocol, currently the usage is relatively low, but it tends to move in waves, and the idea is always to buy low and sell high. When currently the protocol revenue is low, maybe it makes sense to buy that bottom. The revenue on the Virtual Protocol is low, but the number of trades on the virtual platform is not yet dead. We can say the same for the trading volume of the actively traded agents, right? It tends to be a long-term rising chart. We're simply just short-term depressed. So this is strategy number one. Simply buy the thing that's currently low, that has suffered the most. And if Bitcoin really goes scenario A and not scenario B, then virtual is probably going to be one of the best performers. But then there's the second approach, right? Buying the asset that's most robust, where people did not sell during this recent sell-off. And for that approach, it's probably SUI that's the best bet. So potentially the SUI token itself or tokens on the SUI blockchain. Just have a look at the total value lock change in the last 7 days. Everything is red except SUI. The issue is, of course, that long-term SUI is also very risky because the tokenomics aren't that great. The supply will grow by roughly 25 to 30% in the next year. But again, we're not talking about the next year. We are talking about buying the bottom for a rebound. And SUI is now for a long time among the top used blockchains listed on DEX Screener, right? It's above the Binance Smart Chain. It's closely behind Base. And so there's obviously risk involved in all of this, right? Overall, we are still very expensive. Bitcoin is way above its realized price. People on average are still more than 2x in profit. But if we speculate on the current momentum, on the current medium-term positive momentum to continue, and if you expect a rebound, then it's probably either the Virtual Protocol or the SUI chain that's going to gain most from that. Now, here's the thing. There are plenty of topics within crypto that aren't very sexy, but that are, I believe, very vital to make money long term. For example, concepts like correlation. What we see over here are correlation coefficients. Did you know, for example, that most altcoins tend to be more correlated with Ethereum than with Bitcoin? In other words, it's not when Bitcoin goes up that the altcoins go up as well. It's rather when Ethereum goes up, then the altcoins go up as well. Or did you know that the correlation coefficient of the S&P 500 to Ethereum and thus the altcoin market is actually quite volatile? In other words, it does make sense to also own stocks, not just Ethereum, not just crypto. The common narrative is that when traditional markets go down, that crypto tends to go down as well, right? That crypto is simply just a levered bet on, say, technology stocks. That's not the case. The correlation coefficient is relatively close to zero. Or do you know the long-term expected returns of various asset classes, of say gold, of say the S&P 500, of Bitcoin, of altcoins? When we don't just own crypto, but we also own property, for example, and we've got that portfolio, what kind of returns do we need in order to beat monetary debasement, but also in order to at some point to get financially free? How much money do we need to have enough passive income to not having to work anymore? What are expected long-term returns, and how much should we actually allocate towards crypto and towards property, towards stocks, gold, bond, etc.? What actually makes sense? When there are tens of thousands, hundreds of thousands, maybe even millions of dollars on the line, not having this properly nailed down is a huge problem. And when the market isn't that great anymore and the upside for Bitcoin could be somewhat limited, how can we still make money? How can we make money from charts like this? What we see over here is Balancer relative to Ethereum. We can make money by shorting this. Balancer has very bad tokenomics, the supply increases over time, and so it tends to do worse than Bitcoin and Ethereum over the long term. And we can make money from that, again, from the relative valuations, not just from US dollar valuations. When we look at how quickly is the monetary base expanding, and we put this into relationship to how quickly are salaries increasing, we actually see that pretty much everybody is falling behind over time. And this is not just true for the poor people, this is even true for the top 5% of earners. By the way, if you earn $500,000 per year, then you are in the top 5%. But yeah, data like this is useful. And those are not necessarily the sexy topics that work well on YouTube, right? On YouTube, it's the 100x altcoin gems that get all the clicks. But when you talk about diversification and correlation, etc., people just fall asleep. But it's the long-term planning, the long-term proper allocation towards different asset classes that actually make the difference. And so have a look at all of this. Those are tutorial videos of the premium membership of this channel. It's down below, thebitcointrader.com. There's more than 100 tutorial videos in total. What are my favorite crypto macro indicators? How do interest rates impact different asset classes? We've just seen how the market got spooked because the Federal Reserve might get more hawkish. Or how do we adjust our returns for risk mathematically, right? Everybody can get more returns by increasing the risk massively, but the idea is we want to get the best returns for the risk. And so there are ways to calculate this using alpha and beta. Those are all very complex topics, but I strongly believe that it's the skilled people, the people that have most knowledge, that tend to make most money over time. Now, besides all of those tutorial videos, there are also various chats in premium where I try to be active as well. So in case you've got any questions, just tag me in a message in those premium chats and I try to reply. The membership is currently $165 US per month. This is not for people that only have a net worth of $1,000, right? This is for people that actually have to manage wealth in the tens of thousands, preferably even hundreds of thousands of dollars. There is a 1-week money back guarantee as well. So in case you don't like premium, just message me within the first week and I refund you 100%. There's really zero risk for you. Now, if it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you in the next video or see you in premium. Cheers.